Anticipated 50% adoption increase in e-commerce gaming and remittances by Q4 2025, insights from industry experts. Introduction. As we approach the final quarter of 2025, the digital landscape is set to undergo a significant transformation. Experts predict a 50% increase in the adoption of e-commerce gaming and remittances driven by technological advancements changing consumer behaviors and evolving regulatory environments. This report synthesizes insights from various industry leaders to provide a comprehensive overview of the anticipated growth and its implications. E-commerce growth. Current trends and projections. According to industry analyses, global e-commerce sales are projected to rise from approximately $4.9 trillion in 2021 to around $7.5 trillion by 2025. This growth is largely attributed to improved digital infrastructure and expanding middle class in emerging markets and a shift in consumer preferences accelerated by the COVID-19 pandemic. Consumers have become accustomed to the convenience of online shopping, with many making permanent transitions to digital platforms. Key factors driving e-commerce adoption. 1. Technological advancements. Enhanced internet connectivity and mobile technology are facilitating smoother online shopping experiences. The rise of AI and machine learning is also enabling personalized shopping experiences, improving customer engagement. 2. Consumer demand. The pandemic has led to a cultural shift towards online shopping, particularly in the Asia-Pacific region, which is expected to account for over 60% of global e-commerce sales. 3. Sustainability and ethical practices. Consumers are increasingly demanding sustainability and inclusivity, pushing e-commerce businesses to adopt ethical practices that resonate with their values. Challenges and considerations. While the e-commerce sector is on a growth trajectory, challenges such as regulatory compliance, cybersecurity threats, and competition from traditional retail will need to be addressed. The upcoming EU Digital Operational Resilience Act (DORA), set to take effect in January 2025, will compel financial institutions to bolster their digital infrastructure and compliance measures. Gaming sector expansion. Growth dynamics. The gaming industry is witnessing unprecedented growth, with estimates suggesting participation will increase significantly, particularly among younger demographics. As gaming moves beyond traditional platforms and into mobile and cloud, gaming industry leaders anticipate a substantial uptick in engagement. Key growth drivers. 1. Technological innovation. Advancements in mobile technology, augmented reality (AR) and virtual reality (VR) are creating immersive gaming experiences that attract a broad audience. 2. Social connectivity. The rise of social gaming and online multiplayer environments is enhancing community engagement, making gaming a shared experience. 3. Diverse revenue streams. The gaming industry is diversifying its revenue models through in-game purchases, subscriptions, and advertising, thus broadening its market reach. Future implications. As the gaming sector continues to evolve, the incorporation of AI for personalized gaming experiences and enhanced security measures against fraud will be crucial. Furthermore, regulatory scrutiny on gaming practices, particularly around data privacy and age restrictions, will become more prominent. Remittances and financial transactions. Current landscape. The remittance sector is expected to grow as more consumers turn to digital platforms for cross-border transactions. The demand for faster, cheaper, and more secure remittance methods is shaping the future of this industry. Key factors influencing remittance growth. 1. Digital transformation. The increasing adoption of digital wallets and remittance platforms is enhancing accessibility, particularly in crisis-affected regions. 2. Economic migration. As economic disparities continue to drive migration, the need for remittance services will grow. Families and individuals will increasingly rely on digital solutions to transfer funds across borders. 3. Regulatory developments. Governments are beginning to recognize the importance of remittances in their economies. leading to regulatory frameworks aimed at enhancing the efficiency and security of these transactions. Challenges and risks. Despite the optimistic outlook, challenges such as regulatory compliance, fraud risks, and competition from traditional banking services will pose hurdles. The integration of AI in fraud detection and compliance monitoring systems will be essential in mitigating these risks. Summary and conclusion. The anticipated 50% increase in the adoption of e-commerce gaming and remittances by Q4 2025 signifies a transformative phase in the digital economy. Key trends driving this growth include technological advancements changing consumer behaviors and evolving regulatory landscapes. However, businesses must remain vigilant in addressing the challenges posed by increased competition and regulatory scrutiny. As the digital landscape evolves, the interplay between consumer demand, technological innovation, and regulatory compliance will shape the future of e-commerce gaming and remittances. Embracing these changes with strategic foresight will be crucial for organizations aiming to thrive in this dynamic environment. In conclusion, 2025 promises to be a landmark year for digital adoption across sectors, driven by a confluence of factors that are set to redefine consumer interactions with technology and financial services. The anticipated 50% adoption increase in e-commerce gaming and remittances by Q4 2025 presents several counterintuitive insights across various sectors. Here are some notable counterintuitive points derived from the provided content. 1. E-commerce growth and pandemic influence. While the COVID-19 pandemic significantly accelerated the adoption of e-commerce, leading many consumers to permanently shift to online shopping, it's interesting to note that the pandemic's influence was not merely a temporary spike. The content suggests a durable change in consumer behavior, indicating that those who were once hesitant to shop online have now become regular digital consumers. This indicates a fundamental transformation in shopping habits that goes beyond just convenience. 2. Gaming sector dynamics. The gaming industry's anticipated growth is not solely attributed to an increase in gaming participation but also to advancements in technology. The counterintuitive aspect here is that while younger demographics are often considered the primary drivers of gaming engagement, the sector's growth is also being fueled by older generations increasingly participating in gaming, particularly through mobile devices and immersive experiences. 3. Remittances and crisis dynamics. The projection of growth in digital remittances, especially in crisis-affected regions, introduces a counterintuitive notion that economic hardships can drive innovation in digital payment solutions. Instead of diminishing financial activity during crises, there is a push for faster, cheaper, and more secure methods of remittance, suggesting that adversity can lead to significant technological leaps. 4. Regulatory impact on innovation. The introduction of regulations such as the EU's Digital Operational Resilience Act (DORA) is typically viewed as a hindrance to innovation. However, the content presents the argument that such regulations can actually foster a stronger, more secure environment for digital transactions, thereby encouraging innovation in compliance technologies and digital infrastructure. This suggests a complex relationship between regulation and innovation, where regulations can serve as enablers rather than barriers. 5. AI and fraud prevention. There is an expectation that AI will play a pivotal role in both enhancing operational efficiency and simultaneously being exploited by fraudsters. While one may assume that increased AI adoption would lead to a decrease in fraud, the content suggests a duality where AI tools are employed by both financial institutions for fraud detection and by criminals for advanced attacks, indicating that more technology does not necessarily equate to a safer environment. 6. Consumer trust in digital wallets. The rise of digital wallets is often seen as a straightforward move towards cashlessness. However, the content hints at a paradox where increased adoption of digital wallets does not automatically translate to consumer trust. The expectation is that consumers continue to value cash for its control and perceived security, indicating that while technology advances, foundational trust in financial systems remains complex. 7. Financial literacy among youth. Contrary to the narrative that younger generations are less financially literate, the content suggests that the rise of fintech services and instant payment tools is actually enhancing financial literacy among youth. This implies that exposure to sophisticated financial technologies can lead to better understanding and management of personal finance, which runs counter to the prevailing notion that technology alone can create detachment from traditional financial education. 8. Sustainability versus profitability. The growing emphasis on sustainability and ESG, environmental, social, and governance principles in finance, is often framed as an ethical obligation. However, the content implies that these sustainability measures will be increasingly viewed as strategic opportunities for profitability rather than mere compliance costs, suggesting a shift in perception that sustainability can coexist with economic benefits. 9. Neobanks and customer satisfaction. While neobanks have been marketed as the future of banking due to their digital-first approach, the content indicates a decline in customer satisfaction among users of neobanks. This highlights a counterintuitive reality where the very convenience and innovation that attracted customers to neobanks could also lead to disillusionment if customer service and compliance responsibilities are not effectively managed. 10. AI and employment. The content discusses the integration of AI in various sectors but also suggests that AI will not lead to widespread job loss. Instead, it highlights a trend towards upskilling workers to leverage AI tools effectively. This counters the narrative that AI will replace human jobs across the board, emphasizing a collaborative future where AI enhances human capabilities rather than replacing them. In summary, while the anticipated increase in adoption across e-commerce gaming and remittances signals strong growth prospects, the underlying dynamics reveal complex, often counterintuitive trends that suggest a nuanced understanding of technology consumer behavior and regulatory impact. The report, titled Impact, Anticipated 50% Adoption Increase in E-commerce Gaming and Remittances by Q4 2025, outlines significant trends and transformations in the digital economy as projected by various industry experts. While the report provides a broad overview of growth in e-commerce gaming and remittances, several critical insights and nuances may be overlooked, yet they hold substantial significance for businesses, consumers, and regulators alike. 1. Integration of AI in fraud detection and operational efficiency. One of the most important yet understated points in the report is the crucial role of AI in enhancing fraud detection measures and operational efficiencies across the financial services landscape. Significance: with the increasing sophistication of fraud, particularly through methods like deepfake technology and social engineering, businesses must invest in robust AI systems that not only detect but also prevent fraud in real time. The report highlights that AI will increasingly be integrated into compliance processes, enabling institutions to adjust swiftly to evolving regulations and emerging threats. For instance, organizations need to proactively mitigate risks associated with app-authorized push payment fraud, which is anticipated to rise sharply. The implementation of AI-driven solutions can significantly reduce the burden on compliance teams, streamline operations, and enhance customer trust. 2. Consumer demand for personalization. The report emphasizes that consumer expectations are evolving towards hyper-personalization in financial services, driven by technological advancements and AI capabilities. Significance: as users become accustomed to tailored experiences in other sectors such as e-commerce and social media, they expect similar personalization from their financial services providers. This shift compels banks and fintechs to leverage data analytics and AI to create individualized offerings that meet specific customer needs. Companies that fail to adapt may lose market share to more agile competitors who are willing to prioritize consumer preferences. The insights drawn from consumer data will not only enhance user engagement but also foster customer loyalty, which is essential in an increasingly competitive marketplace. 3. Regulatory environment shifts. The report outlines upcoming regulations, notably the EU Digital Operational Resilience Act (DORA) and the anticipated EU AI Act, which are set to impose stricter compliance measures on financial institutions. Significance: the regulatory landscape is evolving rapidly and firms must remain vigilant to these changes. DORA, for example, emphasizes the need for financial institutions to fortify their digital infrastructures against cyber threats. Non-compliance could lead to severe penalties, impacting not only the financial standing of organizations but also their reputations. The proactive approach to regulation, particularly regarding AI and its applications, will be critical in ensuring that firms not only comply but also build trust with their customers. Understanding and adapting quickly to the regulatory environment will be a key differentiator for success in 2025. 4. Rise of embedded finance. Embedded finance is mentioned as a key trend, with businesses increasingly integrating financial services directly into their consumer-facing platforms. Significance: this integration represents a fundamental shift in how financial services are delivered and consumed. By embedding finance into non-financial platforms, businesses can streamline customer experiences and broaden access to financial products. For instance, e-commerce platforms offering BNPL, buy now pay later solutions directly at checkout enhance convenience for customers while also driving sales for merchants. This trend not only increases the competitiveness of businesses but also signifies a move towards a more integrated financial ecosystem. The implications for traditional banks could be profound, as they may need to reposition themselves to compete with tech-driven firms that offer seamless services without the legacy constraints that hinder traditional banking operations. 5. Targeting the unbanked and underbanked populations. The report hints at the ongoing challenges of financial inclusion, particularly for unbanked and underbanked individuals, often a focus in discussions of fintech. Significance: fintech innovations have the potential to bridge the gaps in financial access for these populations. Solutions such as mobile wallets and digital payment platforms can provide essential services to individuals who have historically lacked access to traditional banking. In 2025, as the demand for inclusive financial solutions grows, companies that prioritize these underserved markets could gain a significant competitive advantage. The approach to delivering these services must be user-friendly, culturally sensitive, and aligned with the needs of these populations to maximize uptake and ensure sustainable growth. 6. The future of work and talent acquisition. The report addresses the evolving role of AI in automating processes, which will inevitably impact the workforce. Significance: as businesses increasingly rely on AI and automation, there is a pressing need for upskilling and reskilling the workforce to adapt to new technologies. The financial services sector, in particular, must address the skills gap exacerbated by technological advancements. Organizations that invest in training their employees to work alongside AI systems will not only enhance operational efficiency but also improve employee satisfaction and retention. The future of work will require a blend of human expertise and technology. Those firms that recognize and adapt to this shift will be better positioned to thrive. 7. Geopolitical impacts on financial markets. While the report largely focuses on technological and consumer trends, the geopolitical landscape is an equally critical factor influencing the digital economy. Significance: the anticipated changes in political leadership, particularly in the U.S. with the return of Trump, could reshape regulatory frameworks and trade policies, significantly impacting global markets. Tariffs, trade wars, and shifting alliances can have ripple effects on supply chains, currency values, and investment flows. Companies will need to navigate these complexities while remaining flexible in their operational strategies. Awareness of geopolitical risks will be crucial in risk management and strategic planning for businesses looking to expand in international markets. Conclusion: the anticipated 50% increase in adoption across e-commerce gaming and remittances by Q4 2025 presents substantial opportunities and challenges. However, the nuances of AI integration, personalization, regulatory shifts, embedded finance, financial inclusion, workforce transformation, and geopolitical factors are critical areas that stakeholders must understand and address. Failing to recognize these dynamics could hinder a business's ability to adapt and thrive in the rapidly evolving digital economy. By focusing on these often overlooked aspects, companies can position themselves strategically for success in 2025 and beyond. 1. Technological advancements and integration. The anticipated adoption increase in e-commerce gaming and remittances is significantly driven by technological advancements such as AI and improvements in digital payment infrastructures. Experts predict that the integration of AI will enhance operational efficiencies, fraud detection, and customer personalization. In financial services, AI is expected to streamline processes, leading to better risk management and compliance capabilities. The use of real-time payment systems and the expansion of open banking will further streamline transaction processes, making them faster and more secure, which is essential for fostering consumer trust and adoption. 2. Regulatory changes impacting financial services. Regulatory frameworks such as the EU's Digital Operational Resilience Act (DORA) will shape the future landscape of digital transactions by mandating enhanced cybersecurity measures and operational resilience for financial institutions. Such regulations are designed to protect consumer interests and ensure that institutions are prepared to handle the complexities of digital transactions. The introduction of mandatory reimbursement rules for push payment fraud, for instance, highlights the increasing responsibility of financial institutions to protect their clients against fraud, further driving innovation in security solutions. 3. Consumer expectations and market dynamics. The COVID-19 pandemic has altered consumer behavior, significantly accelerating the shift towards digital platforms. As consumers have become accustomed to the convenience of online shopping and digital transactions, their expectations for speed, security, and personalization have risen. The report highlights that consumers are increasingly looking for seamless, integrated experiences, which has created a competitive landscape where businesses need to adapt rapidly to meet these demands. This includes offering diverse payment options that embrace emerging technologies such as digital wallets and BNPL services to cater to a tech-savvy consumer base. 4. The role of AI and data analytics in financial services. The role of AI in transforming financial services cannot be understated. Experts foresee a significant shift towards AI-driven decision-making processes that enhance client engagement and operational efficiencies. AI will facilitate the analysis of vast datasets to deliver personalized financial advice and insights, thereby improving customer satisfaction and retention. However, the ethical considerations around AI usage, including data privacy and algorithmic bias, will also necessitate a strong focus on governance and compliance, shaping how financial institutions approach AI deployment in 2025 and beyond. In summary, the interplay between technological advancements, evolving regulatory requirements, shifting consumer expectations, and the strategic implementation of AI and data analytics will be crucial in determining the trajectory of e-commerce gaming and remittance adoption by Q4 2025. Understanding these dynamics will not only help businesses thrive but also ensure they are prepared for the challenges and opportunities that lie ahead in the digital economy. 1. The rise of e-commerce in the early 2000s. The transition from traditional retail to e-commerce began in earnest with the advent of the Internet. Companies like Amazon and eBay saw significant growth as consumers began to embrace online shopping. By 2000, e-commerce sales in the U.S. totaled around $27 billion, and as the years progressed, this figure skyrocketed. The adoption of digital payment systems and advancements in logistics infrastructure were key drivers of this change, similar to the projected growth in e-commerce adoption anticipated for 2025. 2. The mobile gaming boom. The mobile gaming industry experienced exponential growth starting around 2010, largely due to the widespread adoption of smartphones. Companies like Supercell and Zynga capitalized on this trend, leading to a significant shift in gaming engagement. By 2025, the mobile gaming market is expected to surpass $100 billion, mirroring the projected increases in digital engagement that experts foresee in the gaming sector. 3. The global remittance surge. The remittance market has seen dramatic changes over the past 2 decades, particularly with the rise of digital platforms. Companies like TransferWise, now Wise, and Remitly made sending money across borders faster and cheaper, leading to a significant increase in usage. As of 2025, it is expected that remittances will see a similar uptick in adoption, driven by the need for more efficient and cost-effective solutions in crisis-affected regions, highlighting the ongoing evolution of financial services in response to consumer needs. Future outlook. Predictions for the future of e-commerce gaming and remittances by Q4 2025. As we approach the end of 2025, industry experts anticipate a transformative landscape for e-commerce gaming and remittances, predicting a 50% increase in adoption rates across these sectors. This growth is driven by several interconnected factors, including technological advancements, evolving consumer behaviors, and regulatory environments. Below are key insights into the future of these industries. 1. E-commerce evolution. The e-commerce sector is expected to experience unprecedented growth, projected to reach approximately $7.5 trillion by the end of 2025. This expansion can be attributed to integration of advanced technologies. AI, machine learning, and data analytics will increasingly personalize shopping experiences, enabling retailers to offer tailored recommendations and efficient customer service. Mobile commerce dominance. With smartphones becoming the primary payment method, mobile shopping will continue to rise. Enhanced mobile payment solutions, including digital wallets and contactless payments, will simplify transactions for consumers. Sustainability and ethical practices. Growing consumer demand for sustainable products will encourage e-commerce businesses to adopt ethical practices. Companies that can demonstrate their commitment to sustainability will gain a competitive edge. Global market expansion. Emerging markets, particularly in Asia-Pacific and Latin America, will see significant growth in e-commerce as internet access and digital literacy improve, broadening the consumer base. 2. Gaming sector growth. The gaming industry is poised for remarkable expansion, with a significant increase in user engagement and technological innovation. Key drivers of this growth include immersive experiences. Advances in virtual reality (VR) and augmented reality (AR) will create more immersive gaming environments, attracting new players and enhancing user retention. The integration of AI will also personalize gameplay, providing tailored experiences based on individual preferences. Cross-platform play. The continued rise of cross-platform gaming will enable players to engage with friends regardless of their device, fostering a larger gaming community. Esports and streaming. The popularity of esports will continue to soar, becoming a mainstream entertainment option. Platforms supporting live streaming and competitive gaming will attract sponsorships and create new revenue streams for developers. Microtransactions and in-game economies. The rise of free-to-play models with in-game purchases will drive revenue growth. Players will increasingly be willing to spend on cosmetic items and enhancements, leading to robust in-game economies. 3. Remittance services transformation. The remittance sector is expected to undergo substantial changes as digital solutions become more prevalent. Factors contributing to this evolution include digital platforms and accessibility. The adoption of digital remittance platforms will grow, particularly in regions with limited access to traditional banking services. This will enable faster, cheaper, and more secure cross-border transactions. Cryptocurrency utilization. The rise of cryptocurrencies and stablecoins will provide alternative remittance options, allowing for instantaneous transfers with lower fees. This will democratize access to financial services for unbanked populations. Regulatory developments. Governments are likely to implement regulations that facilitate digital remittances while protecting consumers. Compliance measures will ensure safer transactions, increasing consumer trust in digital platforms. Integration with e-commerce. The convergence of remittances with e-commerce will create new opportunities, enabling families to send money directly to merchants for purchases, thus streamlining the transaction process. 4. Overall market dynamics. Across e-commerce gaming and remittances, the following trends will shape the future landscape. Increased consumer expectations. As consumers become more technologically savvy, they will demand seamless, personalized experiences across all platforms. Companies that can deliver this level of service will thrive. Focus on security and trust. With the rise in digital transactions, businesses must prioritize robust cybersecurity measures to protect consumer data and build trust. Collaborative ecosystems. The collaboration between fintechs, traditional banks, and technology providers will foster innovation, improve service offerings, and enhance customer experiences. Regulatory adaptation. Companies will need to stay ahead of regulatory changes, particularly concerning data privacy and consumer protection, to maintain compliance and avoid penalties. Conclusion. The anticipated 50% adoption increase in e-commerce gaming and remittances by Q4 2025 reflects a broader trend towards digitization and consumer-centric innovation. Businesses that leverage advanced technologies, embrace sustainability, and prioritize security will be well positioned to capitalize on these opportunities. As the digital landscape continues to evolve, the interplay between regulatory frameworks and consumer expectations will be crucial in shaping the future of these vibrant sectors.